Welcome. My name is Eric Castle. I'm an equity analyst here at ABG, and today I have the pleasure of introducing Axel Berntsson, CEO of Absolent Group. Axel will give us a 20-minute presentation approximately, and we'll do a short Q&A after. So with the limited time, I won't steal any more of it, so please go ahead, Axel.
Right, thank you, Eric. A pleasure to be here, and thank you for organizing this. It will be nice to reach out to some of your customers. Do you have the presentation, Eric?
First slide.
There we go. Perfect. All right, so let's move then to the next page, and we'll start to talk about what we do as a company. So practically what we do at Absolent is that we provide customized air cleaning solutions to our customers. And that is customized air cleaning solutions for a variety of customers. Typically, we manage some kind of pollution in the air. It's an oil mist or oil smoke from a machining process, dust or fume, dry particles, or various types of gases. Recently, we've started a development of a solution for direct air capture for a gas called carbon dioxide, which we are quite excited about for the future. But all these different type of pollutions we manage through first stage of particle filtration. We have multiple different technologies to do that. And then we have molecular filtration, which we also have a number of solutions for. And in the end of this process comes clean air for our customers. So let's move on to the next page. So just a short, brief intro to us, now that you know what we do. So we are about air cleaning solutions. We have a global presence as a company. So we have offices in 24 places, so in Asia, in Europe, in North America. We have currently 8 manufacturing sites around the world, around 400 employees. We are a majority owned by the Melker Schörling family. And of course, they are behind companies such as ASSA ABLOY, Hexagon, AAK, and Securitas, and a number of other companies where they have been an important part of building up those businesses. And then we have Carl-Henrik Svanberg, the former CEO of Ericsson and currently chairman of Volvo, as a large owner, and Joachim West. And I think it's important to know that I do not see the slides anymore, by the way. All right, thank you. That we work predominantly with big, well-known customers around the world. In the aerospace industry, we have Boeing, we get Airbus and their suppliers. We are working in the automotive sector with companies like GM and the Volkswagen family with Audi, Volkswagen, Porsche, and so on. We do work a lot with precision engineering and precision machining, such as dental implants and hip implants and exclusive watches and so on. We also work with large hotel chains and fast food chains. And then we're talking about cleaning the air in their kitchens primarily. We take pride in our competitive advantages. And the key things for us is that we are technology leaders. So we believe that we have an edge over our competitors when it comes to the performance of our filtration units. And thereby we are able to provide, we have the opportunity to provide better solutions than competition. We have also built a quite extensive application know-how, and here in applications is the manufacturing process that our customers have. And that can be a machining process, it can be a casting process, it can be a deep frying process, whatever it may be. We have quite a deep knowledge about what happens in that process and what type of air pollution is generated. And when you understand that in depth, you're able to tailor a solution to that application in a better way than our competitors can. And therefore, of course, we can generate a longer lifetime and a better performance of the solutions. Something that where we stand out, which may not be a competitive advantage versus competitors on the market, but when it comes to being on the stock market, we are successful in acquiring businesses and have been acquiring multiple businesses over time. So we are good at acquisitive growth, but we've also been fairly strong in organic growth, able to open up new offices in new countries and expanding on existing markets and adding more products and so on. We have, and of course, this has generated quite strong growth over time. if you look at the last 10-year period, we have had a CAGR, so kind of average growth by year of 26%. And during this period, we have had an average EBITA margin of 21%. And this meant that last year we passed a billion SEK mark in turnover, and we keep growing from there. We're slightly different this year with the COVID virus, but I think all the growth indicators are still there for us as a business. Let's go to the next slide, Eric. Thank you. So do we make a difference? Yes, we think that we do make quite a big difference. Our installed base around the world filter around 180 million cubic meters of air per hour. Of course, that is a tremendous amount of clean air that comes out. And the consequence of that is that we take out around 2 million liters of oil from the air every year. We make it possible for 1.5 million people to go to work and breathe clean and fresh air every day versus going to a dirty production environment. There's a quite positive impact for the society and for the people working in it. We can go to the next page, please. So our offering that I talked about previously, so we have a number of technologies to manage particle filtration. So we have electrostatic filters, we got centrifugal filtration technology, we got fiber bed, we got cartridge technology. I do think that we have the broadest offering in the world, but we also have a good technical edge to the offerings that we have. And we are not about providing catalog machines. We customize a lot to our customers to make sure we give them exactly what they require. And then we have a number of technologies to filter out molecules, and typically that is gas. So we got UV light technology, we got ozone technology, where you're basically using an ozone gas to break down a chain of carbohydrates. And then we got absorption technology, where you kind of absorb gas and molecules into a kind of absorbents, and then you can release them at a later stage. And then we got an offering of different kind of services. And obvious one is that we do installation of our equipment. We provide spare parts and spare parts management. We do level testing, which is basically you go to a customer site and you measure the performance of the filtration equipment. It can be from us, it can be from competitors. And you write a report to the customer around that performance. And we do project management of large installations when it comes to air handling. And we provide this offering to certain type of customers for certain applications. So the big one for us is machining. Typically that is when you turn your mill or you drill a metal part. Another big segment for it is commercial kitchens. And that is when you fry or you wok or you do something like that in a kitchen that generates a pollution in the air, not too dissimilar to what you have in your own kitchens at home or when you cook food. And we work with metal fumes from typically that is from welding and from cutting technologies. We work with bulk handling processes. So in the cement industry, when managing flour and things like that, where there's a large volume of air and a lot of dust. We work with heavy industries, and that is it can be a rolling mill, it can be a die casting plant or something like that. And we work with food processing. And food processing is a manufacturing plant where you make ready-made food or kind of what you call the components for ready-made food. So you can have a production line that makes French fries that you get in a bag home to your freezer. We can move to the next page, please. So the market we are in is fairly large. We estimate this to be around 20 billion US dollar size market. And around half that market consists of filtration units, which is what we mostly do. And the other half is around the aftermarket and services. And we have an average growth rate in this market of around 8% per year until last year. Of course, this year has been slightly different. And we see that we have and that will continue for quite some time. The market is very fragmented. It consists of a lot of small companies, and a few larger ones. And all these small businesses make it quite suitable for acquisitive growth. So we can go out and we can keep acquiring a lot of businesses over time. We can move to the next page, please. So we have had a quite good activity on the M&A side, where we have acquired 14 businesses over time. And we have made 7 acquisitions last year. And we've also been pretty good at increasing our footprint over time, where we did 7 new countries where we entered with direct sales force since 2015. So more and more countries where we go into over time. And as you can see on the right-hand side, this means that we have had this very, very nice growth curve for the business. We can go to the next page, please. And for the future, we will continue with our growth plan and grow both organically, and then it means we expand on the existing markets, we go into new markets, we add new technologies that we work with our customers and then extend the offering to them, but also about going into new segments. So we had a base in the machining segment before, and now we're entering more and more segments over time. We will also continue to acquire businesses, and we do that again to expand on existing markets. We do it to get access to new markets. We do that to access new technologies and to get into new segments. We can go to the next page, please. And I do think that the market is in favor for us if you look at this longer term. There are some key trends that I want you to be aware of. So one thing is that we see a shift towards local supply chains. And that means that more of our customers want to have supply to the customers where the customers are. So they want to manufacture close to the customer, but they also want to have their supply of components close to the factory. And this generates a drive for more manufacturing plants being built. Modern plants where the requirement for clean air is higher. There are more and more production sites that will be built in Western Europe, in North America, in Western, so that Eastern China, and in Japan and so on, and where the requirements are quite high for really good solutions for clean air. We also see a clear trend on sustainability, where companies are taking more and more responsibility for their both their employees, but also for the environment in general. So they want to make sure there's no pollution coming out from the factories. They want to make sure that their employees are protected and they take good care of them. And of course, we see the capital following this trend with more and more ESG funds and so on. Another important trend for us is digitalization and automation. More and more plants will be automated and they will be digitally managed. And therefore, there will be a lot of sensors in those factories, which means that the air needs to be clean so that the sensors will work as they're intended to work. It means that the machine tool magazines inside the machines needs to be really clean so that you don't have production stoppages when there's no people there to manage the automated machines. And this will also drive an increased use of advanced filtration technologies, which we do think is in favor for us. We can move to the next page. So to sum this up, what we're seeing is that we are on a fragmented market, which is suitable for acquisitive growth. We have a lot of favorable industry drivers with the automation that we said, with digitalization, with localized supply chain, and sustainability. We have a very strong market position with our technical advantages and with our application know-how, and we have been able to follow up and with a strong relationship to these big companies and follow them around the world. And we have a very good track record of profitable growth. So that's what I would like to sum this up with you, and this is the message I hope that you can take away from this presentation.
Very good presentation. So I'm impressed by your margins. They seem to be a lot higher than industry peers. So what's kind of the key activities that you do which allows you to have such high margins?
Well, I think the key is in those two primary competitive advantages is that if you have a technology edge, you can make sure that your equipment performs better, and then you can sell them on the value that we create. And if the value we create is higher, we can command a higher margin for those solutions. And secondly, connected to that is the application know-how. The customers trust that you can really solve the problem because you understand their situation. You're not just opening up a catalog and trying to push something on them. You're actually selling them something that will really work for them, and you can tailor it. By that, you're also able to, if you execute it well, command a higher margin on that project.
Yeah, and then also, when you've acquired a company, you've usually managed to increase its margins quite substantially. So, could you go into the process of integrating an acquisition with Absolent, and kind of which actions are behind this margin increase?
And I think this all comes from the process of how we acquire a business. So how we start with analyzing. So we did this huge job a couple of years back and analyzed thousands of companies in this business and try to understand why some of them are successful over others and how they could become more successful if you change them. It also means that we only acquire businesses where we believe that there's a good potential to increase the margin to above 20%, and where we have a reasonably strong plan for how to get there. So it starts already in the analysis phase before we approach a company. And then, of course, during the due diligence phase, we make sure that we validate our hypothesis of how we could improve their margins. And typically, it is about a few things when you have acquired them. Pricing is a key thing, both with confidence and market analytics, that you understand how a product should be priced. The companies that we buy are normally quite small. So when they're small, I think their access to data is limited. Their confidence in how to price on the right level is perhaps not where it should be. So we can help them price their solutions in a better way. We can also help them in organizing the business in a more industrial and organized way, and thereby run the business with less resources. So they can keep the people they have, but they can double the revenue with the same amount of people. And when you do that, the margins go up quite rapidly.
Yeah, very good. And then you spoke a bit about the market, which half of it was aftermarket sales, I believe. And so, kind of, how much of your revenues today comes from aftermarket sales, say replacement of filters and such?
It's actually a too small piece. We would like to increase that piece, and we are working on that. But it's still less than 20% of our revenue. Where you look at the total market, it is a significantly bigger share of the market. But it also has to do with how we sell our solutions. I think we will always have less share than the general market because we sell the solutions with the aim of having a long lifetime of the filters. It's a good solution. Typically, you want to do two things. You want to filter everything, and you want to make sure you have a long lifetime so that the customer don't need a replacement filter too often, because that generates cost and issues for them when they have to stop the production and so on. So we will always, as long as we are good at using our technology in the right way and using our application know-how in the right way, we should have a longer lifetime of the solutions and therefore lower need for service and aftermarket.
Perfect. And then naturally, your acquisition pace has slowed down this year, and perhaps you could say that you focus more on defense this year. But then looking ahead into 2021, perhaps, do you have an active acquisition pipeline, and when do you think you could return to the offensive, so to speak?
It's always difficult to say, but I think as a principle, we are ready to go ahead. If the right opportunities come up and we get them for the right price, we are ready to go ahead and acquire again. That's our feeling. We have had a year that, in fact, has been pretty good for us because we have had a chance to work more on the integration of the businesses and in reshaping the businesses that we have acquired. So we have been able to put a lot of time and effort on that this year, which we normally don't have perhaps enough time for when we are growing so fast. But we are now, I would say, very much ready to go on the offensive again if the right opportunities emerge.
And for your customers, I know previously you've spoken about order books, and I think in line with Q3 or something, you spoke about you have good order intake, or maybe it was Q2. But could you perhaps comment on this? How your end market is performing right now, and like investment from customers?
What we saw a quite rapid drop coming from March, so mid-March and until August, Because, the curve went like that. It was a pretty dramatic reduction. But this is typical for us, that when there is a downturn and customers hesitate on investment, we will be one of the first things to go from the list. Because we are not the primary manufacturing process of our customers. The machine is that produce the parts that they're going to sell to somebody. So therefore, naturally, they reduce on our side, and they pick up investment on our side a little bit later. So that should be a repetitive pattern that we will see every time there's a downturn, and what we have seen historically. But now we've seen a pretty rapid uptick again, and I think we are well in line with historical levels in Europe and in APAC. We are still behind in North America and in UK, which are also a fairly large market for us, where we haven't picked up yet. And I think that is natural. I think we start to see some industry indicators in the UK, where the manufacturing indexes and so on in the UK have started to turn to growth again. So we do hope that the UK can come and pick up fairly soon, and then we are kind of back in pretty decent shape.
All right, perfect. And then you have 6 business areas right now, and of these, which area has like the best potential, both short term and long term, both when it comes to finding acquisitions and then also organically?
I do think we have a lot of market to gain in the commercial kitchen business, which is something fairly new to us. We entered that a year and a half ago with the acquisition of Jeven. It's been very successful, both when it comes to margin improvement and being resilient in a downturn, where we've gained market, we gained volume in that segment and margins during the last year. So that is an area where we are putting a lot of focus, where we would like to do more business, acquire more companies, and push more. But I also think that our base, the machining where we come from, is a very, very interesting market. You can make really high margins. We have connection to the right customers, and we have been very successful historically in growing that business. And I do think that will continue for quite a few years as well.
Okay, perfect. Thank you very much, Axel, for doing this presentation with us, and I hope everyone listening in enjoyed it as much as I did. And we have our next presentation here in about 5 minutes with Alcadon. So I'll see you then.
All right.
Thank you very much.
Thank you. Take care. Bye.